Good afternoon, everyone. I'm going to do a quick analysis on the what's going on in markets, and I'm gonna use the ETFs. That way, most of you should be able to go to either the use the broker that you use the tools from the brokers that you are using, or you can go into the internet and look for tools, technical analysis tools. You can even go into the Yahoo or the MSN money sites, and you'll be able to find the ETFs and kind of play around with on your own. So, like I said, I'm using the ETF, the SPYs, which is the follow the S&P 500. I'm using the right now. I'm showing a 3-year chart daily, and we have the TP top on 2007. We got the bottom in 2009, and here we have a correct all this craziness going on over here. This is the corrective wave that we're in. Corrective meaning that we're going opposite to the main trend, which is a bear trend or downtrend. So let me go ahead and zoom in. That way you guys can see a little better what's all this going on. Um, this is the past, I said 3 or 4 months since July. We've been in this corrective pattern called a zigzag pattern. Okay, what that is? Let me go ahead and zoom in a little bit more. Um, it's a ABC pattern, corrective pattern that has a 5 wave, a 3 wave down, and a 5 wave up to finish with a C. Um, Now you can see the you can see this pattern in a site that I usually go very often to. It's actually this one right here, where you'll be able to see some of the rules and kind of what you should be looking for. Um, and I'll put the link to that later on, so you guys can check it out and read a little bit about it. So another thing that I want to point out is that um, all the down days on this move up or corrective pattern has been major selling, which which means that it's going to be a distribution phase. Distribution meaning that people are getting out, they're distributing um, their their gains for the past year and a half or whatnot, and the big money has been getting out to be able to minimize their risk or their exposure, if I can speak, minimize the risk what they have in their markets for their customers. So let me go ahead and show you what's going on in the queues. And on the queues, I'm actually showing a 5-year weekly. The reason why I'm using 5-year weekly is because you can see the pattern a little bit better. Um, Again, you had the tippy top in 2007, the bottom 2009. We went up in this rising wedge, which is going to be a breakdown, and it's going to be heading much lower to the downside. We have broke down from it. We came back and back tested it. We did another back test, and we also hit against this downtrend line that it's been hit now 3 times. You can see major negative divergence on the MACD, as well as the distribution from the selling days. And the last thing that I want to show you real quick is the IWM, which is the Russell 2000. In the Russell 2000, you can also see the distribution, the and the divergence. So um, I think this is it. I think there will turn around, and look out below. Thank you for listening. This is directionalanalysis.com.